2008, we learned something. Put liquidity into the system, and you can ensure, at least in the developed world, that we don't have a recession.
Right.
In 2020, but we did it late in 2008, so there was a little bit of, by the time, the TAP program came into place, the economies of the developed world were already skidding. So in 2020, what happened is the minute we had a crisis, the COVID came in, the governments did the right thing. They said, oh my God, we learned from 2008, we have to put liquidity into the system. They put $20 trillion into the system to make sure that there was a bottom to any kind of sort of crisis. This liquidity essentially then, propped up demand in the West and, raised prices until it came back as inflation a little bit later on, of course, accentuated a little bit by the war in Iraq, in Ukraine. And what happened with the developing world was, and we all talked about the special drawing rights when COVID happened and the need for special drawing rights. $650 billion of special drawing rights were released. Africa only got 5%, $35.5 billion. The special drawing rights essentially stayed, again, additional liquidity in the developed world. And so what happened, and I always say sometimes that we have to be careful when we talk about countries that are indebted, because with the tightening, we've seen interest rates rise of 10 times from January 2022 to March 2023. In that period of time, African currencies have suffered a depreciation of 8%. Our debt to GDP levels, without going back to the markets, have increased by 10%. This is not through any issue of sort of poor policy reform. It's just an increase and a tightening of monetary policy in the United States. Now, when you see something like this, the equivalent is, Silicon Valley Bank or something. You run into a liquidity crisis in our economies because all of a sudden your debt obligations increase. Right. You were not planning them. You didn't have fiscal space. You didn't provide for that. Now, rather than having the IMF come in and give you a quick sort of stopgap measure, you send to the IMF, if you're on an SBA program, it'll take you 2-3 years with conditionality. By then, you actually gone from liquidity to insolvency.